Hey guys, what is up? It's Dusty here and welcome back to another episode of the Daily Crypto News. And today, we have a couple of very important crypto announcements. One of them being regarding Goldman Sachs, and this little story goes quite a lot deeper, and I'll show you guys a couple of the very interesting statements and pieces of info that I found around the web. Having said that, we're going to cover a lot in today's video, so if you are enjoying these, make sure you press that like button. Alright, Goldman Sachs aims to raise $2 billion to buy Celsius crypto assets at a discount. This is by far one of the biggest statements in crypto made thus far. It is a huge $2 billion purchase coming from Goldman Sachs, which is a crazy huge investment in the crypto space. Apparently, Goldman Sachs will reportedly raise $2 billion to accumulate distressed assets from Celsius network. And it's kind of funny, but I warned you guys about this, or rather, I informed you guys a little while ago that acquisitions like this in the crypto space from major funds are going to be coming rather soon. Now, very recently here over the last couple of days, we talked about how there's a lot of misinformation, and when you read something about the stock market, it doesn't always translate into news for crypto. Here was some piece of news. Stock market is poised for a strong second half of 2022 as the US economy avoids a recession and inflation gets cut in half, JP Morgan says. Some people are saying that this plus a couple of the futures is looking good is what caused the stock market to do so well at the end of the week, and crypto didn't really do so well. Why is that? Well, we estimated that it could be because of some of the resistances. It could also be because of this actual narrative regarding the inflation. But one of the things that I don't think they can really lie on and that's not so misjudgeable or misunderstandable or whatnot is the actual annual report from Goldman Sachs. And I actually have gone over this thing, I think, twice with you guys throughout the last couple of months, as is the annual report, obviously, from the last year, 2022. And there's a couple of mentions of crypto. The first mention they got here is in there, if we go and look at the exact context. I read it just now. Risk factors, where they mention some of the new competition. Our results have been and may in the future be adversely affected by the composition of our client base. Financial service industry is highly competitive, and the growth of electronic trading and the introduction of new products and technologies, including trading technologies and cryptocurrencies, has increased competition. Our business would be adversely affected if we are unable to hire and retain qualified employees. More on that in just a second. However, if we go through these little posts, in the beginning, I think they're just like a couple of mentions again about this competition. I think here and here it's just more about competition until they go to, no, actually in hindsight, let's just quickly read this little story right here. I think it's rather interesting, the full part of it. So the growth of electronic trading and the introduction of new products and technologies, including trading technologies and crypto, has increased competition. Technology is fundamental to our business and our industry. The growth of electronic trading and the introduction of new technologies is changing our business and presenting us with new challenges. Securities, futures, and option transactions are increasingly occurring electronically, both on our own systems and through other alternative trading systems. We'll continue, and some of these alternative trading systems compete with us, particularly our exchange-based market-making activities, and we may experience continued competitive pressures on these and other areas. In addition, the increased use by our clients of low-cost electronic trading systems and direct electronic access to trading markets could cause a reduction in commissions and spreads. As our clients, by the way, the spreads part, as a market maker, you make the money off of that. Commissions, obviously, as being a exchange or something of this sort, you make money on that, and it can be lower as the competition becomes fiercer. As our clients increasingly use our systems to trade directly in the markets, we may incur liabilities as a result of their use of our routing and execution infrastructure. We have invested significant resources into the development of electronic trading systems and expect to continue to do so. In addition, the emergence, adoption, and evolution of new technologies, including cryptos and blockchain, have required us to invest resources to adapt our existing products and services, and we expect to continue to make such investments, which could be material. The adoption and evolution of such new technologies may also increase our compliance and regulatory costs. One of the parts I found interesting about this is how they might increase the amount of money that they spend, for example, to lobby with some political parties, or I guess to look for the proper crypto regulatory line. Further, technologies such as crypto that do not require intermediation could also significantly disrupt payment processing and other financial services. I mean, take a look at Ripple and with XRP, for example. Regulatory limitations on involvement in products and platforms involving technology such as crypto may not apply equally or in some cases at all to certain of our competitors. And we may not be as timely or successful in developing or integrating, or even able to develop or integrate new products. But they basically acknowledge here that they would lose a significant market share if they're not, able to basically adapt rather quickly. Point being, I've read a lot through a lot of Goldman Sachs papers, all right? A lot of them in my time here, and I haven't been on this earth for too long, but I've read up to a lot of them already. And one of the things I noticed this year specifically is the huge acquisitions that they're going for. One of them is in NN Investment Partners. It's like a crazy one. 1.7 billion euros. One of the biggest ones in the Netherlands was a crazy one. And we can also see it right here. Goldman Sachs is buying Corporate Retirement Plan, robo-advisor Next Capital. And one of the things which they often do is get all the freaking employees. And that's one of the parts that we saw earlier in the annual report, right? They want to go heavy into all of this. Now, specifically, that's not really crypto, yet they have a lot of money to spend on it. And they are acknowledging right there as well at the bottom, they're going to be at a really severe disadvantage if they're not able to adapt to all these changes and the consumer preferences quickly enough. But also achieving market acceptance of our products and services. They know they need to attract new customers in different sectors. They need to acquire the right people, and they know that this sector is emerging. We know that a lot of these lending platforms are in a strange situation with the regulation, and most likely they know for themselves as well that if they get in before some regulatory hits in a positive or negative sense, they might catch themselves a good deal. They might also be able to negotiate in this entire because they have such a crazy superpower, basically. I mean, Goldman Sachs, it's easier for them to negotiate something than for Celsius as a company, with the CFTC that is. But more importantly, right now is a period where Binance, FTX, and all these guys, literally, I have a couple of articles on that as we'll go over later. All these different parties are looking into right now how to save the realm. It's crazy. Now, Goldman Sachs is not here to save the crypto space. Even though they know it's the future and they understand that there's a lot of money to be made and they should keep adapting to it, they're not really doing that to save this economy, I don't think. The way I see it is just because, well, we've heard all the news from Celsius going for bankruptcy here. Goldman Sachs now said if they were to go for bankruptcy, they plan to raise $2 billion from investors to purchase hugely discounted digital assets from Celsius, making me wonder exactly what type of assets they're going to buy. Whether or not because they're Goldman Sachs as a company, they're going to try to buy all the Bitcoin and whatnot at a discount, or if they're going to go for the Celsius or for some of the assets in other ways which they have, for example, the intellectual property. Oh, I just noticed I didn't put it perfectly in the screen. My bad, guys. But again, take a look at this. Goldman Sachs plans to raise the money, as we just cited. Thus, the giant bank continues to dig deeper in the cryptocurrency industry, following talks with FTX for derivative services, collateralizing BTC for Bitcoin-backed loans, and a lot more following years after bashing it. We all know, JP Morgan, all these guys, they're transferring over. They've been bearish at one point or another, but they're transferring over to becoming really adaptive towards it. And again, their yearly report, it doesn't lie. But let's continue on. What's going on? I mean, I've already read for you guys over the last couple of days a couple of parts where we're seeing that this lending space is becoming rather scary. No more fragmented crypto rules. SEC chief confirms formal talks with the CFTC. This is just regarding the lending platform and whether or not there should be rules for that, or at least different rules. We've seen a lot of hacks and strange things happening to crypto platforms, which is again why I think Goldman Sachs is onto the freaking money. They know what area to buy into. They know what needs this money and where it can be used, so to speak. If I were them, I think I would kind of do the same thing. I mean, this is just a really crazy money opportunity for them. It's not a bailout, right? They're not trying to be nice people. They're trying to take it over and make money off of that. But it shows some faith in the crypto space. Here's actually the picture I wanted to start the video off with. How accurate is this? First of course, we had the Terra Luna crash, and I'm going to be making a video soon here about what's happening to Cardano, as a lot of it has to do with Terra Luna crashing as well. But because of that crash where I lost a lot of money, as you guys remember with Terra, it was crazy with the UST, still despise that. Then Celsius kind of shut itself down. Then we had a Harmony, at least a part of that hack, and that's been awful. We've had BlockFi. We had a lot of these platforms stopping withdrawals, at least doing some crazy shenanigans. Now people are wondering what platform or what protocol is next to fall. I'm not talking about one or two things, right? We've also seen a lot of exchanges just go crazy in terms of laying off employees. We've heard a lot about that. Apparently Bitpan is also on the line to let a lot of people go. Apparently they're laying off about 25% of the workforce. BlockFi is going for some crazy shenanigans, even though they're going to get bailed out by FTX apparently. Crypto exchange FTX in discussion to acquire stake in BlockFi. Here it says they're increasing deposit rates, removing free monthly withdrawal, for example. It's just honestly a crazy time for the crypto space. We saw this last week. Crypto lending platform Babel Finance pauses withdrawals, citing liquidity pressures. And I don't know if we just showed this one. Not sure if it's perfectly in the screen. I think so. A crypto lending platform should be regulated by former CFTC chairman. Quote, a lot of people have losses who didn't understand the risk they were taking. End quote, by Timothy Massad, said on CoinDesk TV First Mover. This is one of the things that I'm always in the middle of. I can partially, firmly agree, saying, yeah, they need to be properly regulated because a lot of people are buying into UST, for example, with the idea that it's safe money. They could just easily buy this and it will just go up forever and ever and ever. However, it's also this little thin line of what is safe, right? I mean, a lot of these platforms, they were properly backed in every way, shape, or form. They can be built out, but they're choosing not to. In theory, you know, if you're lending out money to your bank to get some saving return, is it safe? Well, it's just so safe until the moment that things actually start to go wrong in terms of bank run and they'll get a bailout, right? And that's the same thing for the crypto space. It is quote unquote safe because they're most likely properly backed for most of these guys until there comes some sort of bank run where everybody wants their money, or some of the main investments that they made, they go bad. You don't have that happening often, but the entire UST situation, the whole Luna situation, that caused so much disturbance in the crypto space. That caused the price to crash so much and things to go so bad because it was one of the most known platforms to lend out your money, which got a whole freaking spiral of negative energy. There's a lot of negative energy in the space nowadays anyway, right? We also had this news. I don't want to go too far into this, but apparently Yuga Labs has filed a lawsuit against parties slandering the Bored Ape Yacht Club NFT project. There's a couple of videos going around right now in the space, not exactly the crypto space, but just the YouTube space, that are really, really negative towards the Bored Ape Yacht Club. And apparently there's a couple of lawsuits going around. But even, I guess, the Ripple lawsuit is a clear example, right? Crypto regulations right now are at a certain spot where there need to be some sort of bottom rules. Goldman Sachs is partially investing before they're there. I honestly think maybe because they can get more money this way, they can make more money. Partially it might be because right now the prices are a lot cheaper than once the regulatory clarity is actually there. Partially because they want to expand into a new emerging sector, and they know if they get this deal done, they're basically the first to get this done out of the major banks, so to speak, right? What I mean with that is we all know there's a lot of money being poured into this, but the moment that I said this is a couple of times before as well, the moment that Ripple wins the lawsuit, which I think they will, but again, we cannot guarantee, but I think they will, that's when I think a lot of this regulatory clarity will start attracting a lot of big investors. The moment that the Bitcoin ETF, the spot ETF, gets accepted, that's when a lot of institutional investors are going to start buying in heavily. The moment that this happens, Goldman Sachs is a little bit up front there, and they're showcasing they're going to go heavy on crypto. If you are not convinced that this crypto technology is here to stay, we can't sit around the same table. Again, quote this and think about this properly. Citing sources familiar with the matter, CoinDesk reported on Friday that Goldman Sachs wants to get involved after previous investors refused to bail out the crypto lender. And once more, Crypto Potato reported that the drama unfolded with Celsius early this month when the crypto lender halted withdrawals as well as another service on its platform. Yet that happened only after transferring more than 300 million to digital asset platform FTX. Are you understanding what type of move these guys at Goldman Sachs are making? They calculated this to the best of them. I still wonder, right? Is there something happening to the stock market that we need to take into account when all this is happening? Not exactly sure. Sometimes I theorize thinking, yeah, maybe. But this is just justifying as to why the price of the stock market went up. It doesn't necessarily explain why they want to go for such crazy crypto investments. Maybe it all ties into the fact that, well, the stock market might actually recover. So crypto is going to recover even harder as we've seen in the past. So Goldman Sachs as well wants to get their foot in the door. Maybe it's because they have enough money they just want to buy cheap things. A lot of explanations for it, but this is a huge ordeal, and I just wanted to share with you guys in today's video. So that was it for today. Hopefully you guys all enjoyed it. See you guys later.